Welcome to another episode of Limitless Trading. During the summer, I usually tell people to take it easy, trade a lot less, don't push too many buttons because market makers went on vacation. They are up 22% plus from these lows down here. And what did I say? Market is bullish in the summer with a hiccup here and there. There hasn't been a bearish summer in 21 years. Can this be the first summer? Absolutely. And that includes the carry trade of last year, which my group caught at the 9% drop. Now, I said if 5983 broke down, you have a short that you could take, but be very cautious, right? 5900, 5913 was support, but we have the support line that the market is defending from the previous bull flag. So it's a little bit of multiple trend lines. We have a trend line here. We have this trend line, which is defending, and then a steeper one, which is coming up here. So you have this one that broke down. And I said, be careful breaking the first trend line because market was going to find support at around 58.30 for the summer. POTUS does not want a bearish summer when everybody's out spending money, trying to pass the big, bad, beautiful bill. So I tell people, ignore the noise. Market breaks down, you have a short. But once market recovered, the trend line, they barely went to 58.30. The market went to about 58.50, found liquidity, then found a little bit of liquidity here at 58.60, broke above 59.17. You're bullish, folks. Every time we regain support, you're taking calls to 59.83, which is still a little bit of resistance. And these guys here at 60.50 and 6,200. Remember, these guys are still trapped from the election high, right? From actually the July correction that was the low into the elections into February. You still have people all here that want out. They don't care what the excuse is going to be. If the jobs report is mild, we're going higher. Unless it's horrible, we're going to keep going. You're watching trend lines, you're watching levels, and you're ignoring the noise. If you miss certain levels, I always say wait for a back test, wait for a trend line to back test. If 59.80 rejects again, you're taking your short because we haven't really gone anywhere, folks. Since what day is this? Since Friday the 23rd, guys, we've been in the same about 100 and call it 150 point range, doing absolutely nothing. The market hasn't gone anywhere, nowhere. This was the low. We came up here, defended 5,400. I told everybody, stop trading the tariffs. Now it's August 31st. There's no tariffs. That's it. The bond market told POTUS tariffs are over with. Now it's the levels and the supply chain shock. And what do small businesses do when people start ordering when they finally have an idea what's going on? So you're looking at levels above 58.30. You're still risk on to 60.50, possibly to around say 60.80. Then there's a little bit trend line here at 61.15, so on and so forth. But we have a lot of liquidity here of these folks that want out. You want to short if something rejects. So 59.83 rejects, shorting back down to 59.17. And guys, you're taking base hits, you're ping-ponging this whole mess because even though we broke the trend line, we recovered. Then we broke it and we recovered. So let 59.17 break, turn into resistance. After, I suspect we're going to be bullish this week into Friday. Let's see what the jobs report. If the job report is bullish, guys, we're going to all-time highs. We're going to the nosebleeds, right? If the job report is bearish or market makers decide, okay, let's start taking some profits into next week, right? Because we've been up and there's a little bit of red here from May 21st into, Thursday, Friday, May 20th. We had into the Memorial Weekend where I said, guys, there hasn't been a bearish summer, a little bit of profit taking, and we're back up again. So let 58.30 reject. 59.17 is now your support. If that rejects, then back to 58.30 for liquidity. But frankly, I think if we hit 58.30, no one's buying anymore. We're coming down. The market needs new liquidity, either here at 57.76, 57.36, or down 5,600, so on and so forth. Markets are only going to take profits if something bad comes in. The jobs report on Friday, maybe CPI is a little bit hot because prices are going up. You guys are seeing it across the board. Gas is not coming down. Groceries are not down. Rents are not down. So CPI could be good. CPI could be a miss. Don't assume. If your levels are bullish, don't counter trend. Don't get frustrated. You could take micro trades and trade all this bullishness. And then when the support breaks and turns into resistance, then start shorting and shorting and shorting. But we got to get out of the upside trend to be bearish, right? We're in an uptrend, even with a couple of red days. We're in an uptrend, so don't try to time it, because frankly, timing it would be best at 6,200 or all the way around here, July. Let's say July 30. Actually, July OPEX. We're probably going to be at 6,500 now that we know that tariffs are delayed even more. The key is going to be how much of a supply shock we're going to start getting around June and late July, after the 4th of July, as people start ordering stuff for the fall, for school, front running Labor Day. If we start getting up here and then rejecting. So in the meantime, risk on at 59, if 59.80 is green, risk on very, very lightly, because you should have taken your long here at 58.50 when the trend line held, or you should still be long from 58.30 from this trend line that defended of the breakdown. I said, guys, you don't hit, if you take the short on the first break, keep it tight, because the markets are going to want to back test probably 6,200 by let's see if we do 6,200 by Monday the 23rd, around OPEX. But let the trend line breakdown or the support resistance tell you where you're going. Don't front, don't assume, don't be upset. You don't agree with the data, it's bearish, it's bullish. Market makers don't care. They're trapping liquidity. Every time something rejects and people start shorting, they push it out. You know when they're going to drop it? When everybody stops playing the market. The amount of money that's pouring into the market after taxes tells the market everybody is fully liquid and people are ready to play. So your job is to grab the levels, watch if something holds or rejects, take your short and take your long. If you have any more questions, please comment below, and we'd love to assist you.